What should we expect in the coming market for real estate in the fall? I'm going to give you my thoughts in this video. And obviously, with the exception of the year 2020 being the pandemic, there are a lot of seasonal norms that we experience annually when it comes to the real estate market and kind of the activity. And what most people probably don't know is that the biggest month-over-month increase, meaning the amount of activity and also sales that we'll see, is from August to September, which is after Labor Day to about like mid-October. So August is actually the second slowest month in the year, only after Christmas, December, right? And September tends to be one of the more active months. So going from a very slow market to a very active market could be a shock for some people. And I see this countlessly every single year, and I make this video in some way, shape, or form every single year. So, however, though, at the same time, we should be expecting another Bank of Canada interest rate hike on the 7th of September, whether they have it for 50 bips or 75 bips. So we'll have a lot of telltale signs at the end of September on kind of where the market is heading. Now, if you're one of the many buyers or sellers gearing up for some action in the fall real estate market in September and are looking for some help transacting in the next couple of weeks, you can book a strategy call with me using the link that's on the screen right here to kind of navigate the fall market. Simply click on the date and the time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run a RE/MAX brokerage in the Greater Toronto area, in addition to making awesome real estate content just like this for you. Now, the numbers for August, when you see them, probably like say around the first week or so of September, depending on Labor Day, are going to be very confusing. And this is kind of what it looks like right now with a little bit less than 2 weeks to go. And you can see that we're going to get absolutely smoked in this number of sales department, meaning the activity, how many properties have sold. Probably like top 10 or 15 least amount of sales ever in any month in the last 20 plus years. That's how bad it is. It puts us on par with April 2022, which I'll show you up here, which is the month of the pandemic for the first one. So it'll be bad. What's going to be confusing is that the average price will likely be up month over month and a bit year over year from like last year. And the reason why I'm giving you this sneak peek into this data, even though it's not fully set, is because a lot of people don't understand the kind of massive uptick in listings, buyers looking again, and even prices from an average price point perspective come September at the end of it when it's all said and done. Now, I showed this chart a few weeks ago, I think, for the month-over-month change in the average price from August to September, which is the price increase, right? And you can see that there's only really 1 month in the last 20 plus years where when you went from August to September that the prices actually went down. And given that we're likely to see a month-over-month increase at the end of August, some of the real estate bulls will argue the market is coming back. While that argument may be true, you have to lay over a lot of other factors as well, right? So the real estate bears, right, meaning people who aren't optimistic about the market, would argue that what's happening right now is called a bull trap, or it's basically that a signal that is really, really bad, outlining that we're seeing a rebound. And I would tend to agree with that because there are a lot of other factors that could see the prices jump up and then go back down afterwards, which is, like the interest rate. And like I've been saying in the intro, we're probably going to get like 50 or 75 basis points, which will bring the variable mortgage to around 5% at the banks. Yeah, it's a lot. Now, a part of me thinks, and also heard from other agents and also sellers, they're getting ready to list for fall. But there's a big part of buyers who are going to come back, and I think they are going to come back. There's a lot of them, and a lot of people have called me for that. But I also think we're going to get a ton of listings come online at the same time. The question becomes, which side of the demand and supply equation will, be stronger? Like, what we're going to get more of, buyers or sellers? And that's what nobody knows, right? So if you're looking to sell your place, say September, which is probably a good month to catch a little bit of the seasonal momentum bumping up before prices, what I think will come back down for the latter half of the year and maybe at best stabilize, then yeah, it makes sense to sell. Now, just because there is momentum going into the fall market, or we're just starting to see the bit of it, it doesn't mean that you can just throw your property on, MLS and expect it to sell like it did in February, because it'll still be a very tough market and you still need to stand out. So if you want your property to stand out and sell for maximum dollars, you can book a seller consultation with me using the link that's on the screen right now. It's www.chatwithzen.com, right? If you found this content useful, it probably means someone else will as well. So make sure to help us spread the knowledge out there by smashing the like button. And while you're at it, just subscribe. We're almost at 10,000. If this crosses 10,000 before it gets released, thank you very much for everyone who subscribed and kind of help us get to that milestone. Now, one of the other thing that I was talking about that I should expect in the market is the trigger rates, and they're going to trigger. However, I don't think this is going to force a lot of people to sell. Like most banks are just wanting to collect their interest on the mortgage, which is like the revenue, right? And they don't really care about, having your principal payment, like the part you pay down of your equity, not being paid down, meaning that we're ultimately kicking the can down the line. And for some of these mortgages that are, amortizing more than 30 plus years right now, the bank doesn't sound like they care. And if the market doesn't bounce back for people to kind of refinance of those positions, we'll be in for some trouble, but that's kind of like trouble that we'll be seeing further down the line. And that's why I think only a small amount of people will have to sell due to the trigger rate. And this is why I think the average price at the end of September is actually going to be decently strong, right? The freehold homes, so like specifically your detaches, but also like some of your semis and towns, tend to follow the seasonal trend, whereas condos generally don't. This means that most of your high ticket real estate is bought and sold around the spring and the fall market, which kind of skews the average upwards because condos are the least expensive property. So the idea that a detached home is down $500,000 because, from the peak of the market is likely going to get a new narrative very soon in the next, call it 6 to 8 weeks. However, much of that recovery and whether it is a full-on recovery, nobody knows, but this will be part of the seasonal bounce back that we experience every single year. Now, for buyers, after hearing a lot of what I just said, you may be thinking, oh, you know what? I'll just wait until November or December to buy, especially if it's a freehold, so that you're out of the seasonal peak, right? And it's true, there is. But one of the things that most people are too focused on right now is timing the market. But what they don't understand if you're buying is that the quality of product that comes out during the peak real estate months in the season, so like fall and spring, they are the best property. So if you're looking for something that's turnkey, and most buyers are, and trust me, there's a lot of you looking there because I've screened a lot of calls, this is the time when most of the product that checks off most of your wants and your needs, or whatever that checklist is that you have, are going to happen. What's going to be remaining on November, December are stuff that nobody wants. And this is exactly why in the last few weeks, super turnkey properties that are newly renovated are still getting multiple offers, because the buyers who are out there buying right now are end users looking to live in that property. Now, most of the time, these buyers don't want to reno because they don't have the money or because they don't want to. And majority of the money factor comes from the fact that you spent so much of it on the down payment, so you don't have money for renos. And that's why I'm educating my clients that are looking to buy a property right now and showing them what's available during the slower months right now, so that they're prepared for the coming September and the first 2 or 3 weeks, so that when the listings do come, you know exactly what you want already and you are not wasting your time looking around. And I see this every single year, and that's how we do this. So if you are looking for expert guidance on where to buy a property and how to navigate the market right now, you can book a call with me using the link right here. It's www.chatwithzen.com. Now, my final remarks for you is this. In summary, we're going to see a spurt of activity in October and probably the first half of October, and then things will and probably fizzle out. Now, this spurt of activity will probably be a result of higher sales now, relative to now, because we're at 10, 15-year low, higher average price. But it's all relative. But it doesn't mean that the overall trajectory of the market is going up. It's still slumping, right? And this is because seasonal monthly changes are at the core, the most micro of changes when you're looking very long term. So when you look in a 3 to 10 year horizon, you can't even see them. But the macro effects of higher interest rates and a potentially looming recession, that could take anywhere between 12 to 18 months. Plus, this is before how we know, inflation is going to shape out, plays a bigger role in the medium term. And then the massive population boom and the record permanent residents and international students that's coming in right now is an even longer horizon in the further back end that won't probably play out for years to come. And this is all to say that you can't call out one point and say that the market's going to go up or go down. There are so many other factors at play that it's impossible to time the market. So you can try to understand each and every single point I just talked to you about and do your best to navigate the market, because if you need to sell or you need to buy, you just got to weigh it against your own personal financial reasons of why you're buying and selling, instead of, say, the interest rate or the population or the seasonal change I just told you. Because again, like I was saying, No one knows what ultimately is going to happen. You just have to do what's best for you. And that's why you can book a strategy call with me, for me to understand what your personal situation is. But what I will say is that for the next, call it 6 to 8 weeks, there are probably a lot of buyers and sellers out there. And if you are one of those and you're looking for some help in the Greater Toronto area, whether you're buying or selling and how to navigate this crazy shenanigans, you can go to the link on the screen that's right here, www.chatwithzen.com, to book a strategy call to determine what's the best course of action for you and yourself personally. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.